Alright, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive sellers were active at the 79.75 to 81.75 resistance zone, and overall the market just continues to balance in a range. Now heading into the open, we're going to be using 71 quarter to 73 quarter as the micro bull bear zone to establish our short-term directional bias, and as long as buyers can hold ES above that zone, we can simply balance within yesterday's range and perhaps extend to the upside, test 79.75 to 81.75, potentially 85.5 to 87.5. The overall context is of a balanced market. There isn't any scheduled economic report that can serve as a catalyst today. Tomorrow we have Yellen speaking, and that could potentially be a catalyst. But today, as far as the economic calendar goes, it's pretty quiet, and so far we are running on below average volume. So if that theme continues, then today could be yet another balanced session, and we could just continue balancing in a range. In the event of a break below the 71 quarter to 73 quarter, we could get a pullback to the 65 quarter, 67 quarter zone, and 60 half to 62 half. It would be yet another test of those support areas, and the more times you head lower and start testing support, the weaker it's going to be. So the buy response at those support zones may not be as strong as it was yesterday. You may simply at that point balance at lower prices, or you may balance below the micro bull bear zone, and between initial support and the micro bull bear. 60 half to 62 half is still a key support, and in the event that we break and hold below it, if we're running on low volume, then it's low odds that we'll get a break below that zone, or any type of liquidation. But if volume picks up and the environment changes intraday, where the other markets start breaking lower, and then the volume picks up in the S&P and it breaks 60 half, 62 half, which again is a low odd scenario, then the liquidation idea would be in play yet again. So, right now the high odds scenario is the market simply continuing to balance in a range with no real catalyst to drive prices outside of the recent balance. So we could just, balance around the micro bull bear zone today, where any breaks below it attract buyers at support, and any extensions to the upside still attract sellers at resistance. As far as the other markets go, we wanted to see NQ holding above 35.80 to 35.85. That's where it found support in the overnight session here. And looking at TF, it has been relatively weak compared to the other markets. So we want to see it holding at the very minimum above 11.15 to 11.17. And ideally, we want to see it trading back above 11.20 to 11.21 in order to really open the door for some upside momentum in the other markets. If TF continues to be depressed and holds below 11.20 to 21 and starts balancing at lower prices, that would be a red flag for buyers, and it could result in some weakness in the S&P and NASDAQ. And then in NQ, we do want to eventually see it trading above 36.05 if we're going to get a retest of the 85.5 to 87.5 zone in the S&P. So, at the moment, the context is relatively mixed. We know that in the overnight session, we're set to open on a weak note here. The markets are very balanced. There isn't really a whole lot going on, and if volume continues to be light, then it could just be another balanced range-bound session. But we are open to taking trades on either side. We're not stuck on the long side or short side. We'll use the 71 quarter, 73 quarter to help us gauge how strong or weak this market is. If that zone goes, then we know that there's some weakness present in this market, and we could go down and test 65s and 60 half to 62 half before we get any decent buy response. So those are the areas we're going to be watching, and we'll be watching the support areas in the other markets as well, just to gauge which side's in control. And overall, if the volume stays light, then we want to be selective on our trade setups and really just look for some short-term reactions at the zones rather than more bigger picture and momentum type trades where we're holding for a bigger move. Today could just be kind of take a quick maybe a 4 to 5 point profit here. If that trade sets up, if the reward potential is not giving you at least 5 points or 4 points, then it's probably not worth the risk. So in that case, we would just stay on the sidelines until the market provided us a high reward to risk, high probability setup. So you don't want to put on risk in a very choppy environment. So we want to see some directional conviction. We want to see some strength on the internals. Want to see the other markets holding up, and then we can start looking at buying pullbacks. And if the other markets start showing weakness and ES is also not holding the bull-bear zone, then we can still consider short setups. But understanding that this market has been really resilient, we would really have to see the weakness develop more in real time in order to hold any short trades for an extended period of time. So at the moment, just very balanced two-sided market. We are bound to get a move outside of this balance. It's just a matter of time. Since we don't have any major catalyst today, it seems unlikely it'll happen today. But let's keep an eye on volume and the price action, and at least be open to taking advantage of a good opportunity if it develops. But at the same time, not forcing a trade if we're just chopping in a range, volume's light, tick is very balanced. Then you just want to be more careful and just take conservative type setups where you can get at least a quick reaction off the zone. So right now, those are the main ideas heading into the open. Let's see if the buyers are able to hold it together today, and we'll take it from there.